Anticipated 50% revenue growth in gaming, music, and digital marketing by Q4 2023, an in-depth analysis. Summary. The projected 50% revenue growth in the gaming, music, and digital marketing sectors by the fourth quarter of 2023 is the result of a combination of factors that reflect both the successes and challenges within each industry. The gaming sector in particular is characterized by a paradox of high-profile successes alongside significant layoffs and revenue stagnation. Meanwhile, the music industry is experiencing a resurgence driven by streaming and live events, and the digital marketing sector is evolving to focus on personalized advertising and data analytics. 1. The gaming sector. Current state. The gaming industry is navigating a complex landscape marked by significant successes juxtaposed with notable challenges. In 2023, consumer spending on video games increased slightly by 1.1% to $57.2 billion despite a backdrop of record releases and hardware availability, including popular platforms such as PlayStation 5, Xbox Series X, and Meta's Quest 3. However, the industry faced an unprecedented wave of layoffs, with 10,500 jobs lost attributed to rising development costs, post-pandemic market corrections, and declining user engagement. Notable releases and IP expansion. Despite these challenges, 2023 saw remarkable successes with major titles like Baldur's Gate 3 and Hogwarts Legacy, the latter grossing $1.2 billion shortly after its release. Furthermore, adaptations of gaming IPs into television and film such as HBO's The Last of Us showcased the potential of gaming franchises to thrive beyond their original mediums. Challenges. The gaming sector is grappling with several challenges, including inflationary pressures, a decline in mobile gaming revenue due to Apple's IDFA changes, and a post-COVID market correction. While platforms like Roblox and Fortnite have shown user growth, the overall market remains under pressure. 2. The music sector. Growth trends. The music industry is experiencing a revival, fueled by the growing popularity of streaming services and live events. The integration of technology into music distribution and marketing has facilitated greater audience engagement, leading to increased revenue generation. Driving forces. Streaming services. The accessibility of music through platforms like Spotify and Apple Music has transformed listener habits, contributing significantly to revenue growth. Live events. The resurgence of live concerts and festivals post-pandemic has also boosted revenue, creating new opportunities for artists and promoters. 3. The digital marketing sector. Advertising dynamics. The digital marketing landscape is evolving rapidly, with a shift towards personalized advertising and data analytics. Privacy regulations have influenced this shift, leading brands to adapt their strategies to engage consumers effectively. Emerging trends. Mobile advertising. As mobile usage continues to rise, brands are increasingly utilizing platforms like TikTok and influencer partnerships to reach younger audiences. Data analytics. The importance of data-driven decision-making is paramount as companies seek to enhance their advertising efficacy and ROI. Common key points across sectors. 1. Crossover success. The gaming industry's ability to leverage its franchises in film and television highlights a growing trend of cross-media promotion, driving revenues beyond traditional gaming formats. 2. Economic pressures. Both the gaming and digital marketing sectors are feeling the effects of inflation and shifting consumer behaviors post-pandemic, which are impacting growth trajectories. Differences in perspectives. Outlook on gaming. Different sources present varying outlooks on the gaming industry. While some emphasize the paradox of success amidst layoffs and stagnation, others highlight the resilience of established titles and the potential of emerging platforms. Focus on revenue models. Some analyses focus on the challenges posed by regulatory changes in the mobile gaming sector, while others discuss the ability of major franchises to weather economic storms and evolve with consumer trends. Timeline of events. 2020 to 2021. the gaming industry experienced a surge in engagement driven by the COVID-19 pandemic, leading to inflated expectations for sustained growth. 2022, a significant drop in revenues marked the beginning of market corrections attributed to a lack of major game releases and shifting consumer habits. 2023, the year witnessed major releases and hardware availability paired with layoffs, raising questions about the sustainability of growth amidst economic pressures. Conclusion: while the gaming, music, and digital marketing sectors exhibit signs of potential growth, they are navigating a landscape filled with challenges. The ability to adapt and innovate will be crucial for achieving the anticipated revenue increases by Q4 2023. The interplay between successes and challenges will continue to shape the future dynamics of these industries. This analysis encapsulates the multifaceted nature of the anticipated revenue growth across the gaming, music, and digital marketing sectors, underscoring the need for continuous adaptation in a rapidly evolving landscape. The anticipated 50% revenue growth in the gaming, music, and digital marketing sectors by Q4 2023 presents a landscape rife with counterintuitive insights and contradictions. The gaming industry, while expected to thrive, is facing paradoxical challenges, including significant layoffs and stagnating revenues despite high-profile game releases and hardware availability. The music sector is seeing a resurgence, but its growth is tightly linked to digital innovations and live events. Meanwhile, digital marketing is evolving, but its effectiveness is hampered by regulatory changes and shifting consumer behaviors. Gaming sector. 1. Paradox of growth and decline. The gaming industry is experiencing a unique dichotomy. Despite a minimal increase in consumer spending and record layoffs totaling over 10,500 in 2023, major titles like Hogwarts Legacy grossed over $1.2 billion shortly after release. Notably, while companies are laying off talent to cut costs, successful franchises are driving cultural engagement and revenue across other media, suggesting that gaming IPs are becoming more valuable outside traditional gaming platforms. 2. User engagement and market correction. The industry has seen a post-pandemic correction, with user engagement dropping alongside rising development costs and inflation. Major titles that should have boosted revenue failed to do so significantly. For instance, despite a record number of game releases in 2023, software sales rose only 1% in nominal terms and fell 2.1% in real terms compared to 2022. This indicates that even with a strong release slate, overall spending did not meet expectations, contrary to historical patterns where strong game launches usually correlate with revenue spikes. 3. Impact of mobile gaming. The contraction in mobile gaming, primarily due to Apple's IDFA and ATT policies, has led to diminished ad efficacy and revenue. While mobile gaming once accounted for a substantial portion of overall gaming revenue, the regulatory changes have effectively stymied a key revenue stream. As a result, the mobile segment's revenue is forecasted to decline further, contradicting the previous growth trajectory attributed to its accessibility and broad user base. Music sector. 1. Streaming versus live events. The music industry is reportedly recovering, but this growth is largely driven by the resurgence of live events rather than streaming services. While streaming remains a critical revenue source, the real growth seems to stem from the return of in-person concerts and festivals, which contradicts the earlier assumption that digital distribution would dominate the sector entirely. 2. Technological integration. The music sector's growth is tied to innovative digital marketing strategies that enhance audience engagement. This suggests that while streaming alone can drive revenue, the fusion of technology with traditional live events is where significant revenue increases are being realized, challenging the notion that digital-only approaches would suffice. Digital marketing sector. 1. Personalization and regulation. The evolution of digital marketing towards personalized advertising has been significantly impacted by privacy regulations. The anticipated growth in this sector is countered by a decrease in ad efficacy, especially in mobile environments. The introduction of stricter data privacy laws has made it more challenging for brands to engage consumers effectively, contradicting the expectation that increased personalization would lead to higher engagement and conversion rates. 2. Influencer marketing dynamics. The shift to platforms like TikTok illustrates a counterintuitive trend where older marketing strategies are becoming less effective. While influencer partnerships are seen as a means to reach younger audiences, the saturation of influencer content has led to diminishing returns, suggesting that the effectiveness of such strategies may not be as robust as previously thought. Conclusion. In summary, the anticipated growth across the gaming, music, and digital marketing sectors by Q4 2023 is juxtaposed against a backdrop of significant challenges and counterintuitive realities. While the gaming industry boasts high-profile successes, it grapples with layoffs and revenue stagnation, undermining the narrative of unbounded growth. The music sector's resurgence is driven more by live events than streaming, while digital marketing faces hurdles due to regulatory changes that limit the effectiveness of personalized advertising. This complex interplay of successes and challenges underscores the need for ongoing adaptation and innovation within these industries to achieve the projected revenue growth. The counterintuitive information suggests that while growth is anticipated, the traditional pathways to success are being disrupted, requiring a re-evaluation of strategies across all three sectors. The report on the anticipated 50% revenue growth across the gaming, music, and digital marketing sectors by Q4 2023 presents several points that are significant yet often overlooked by many readers. Here are key insights drawn from the findings along with an explanation of their importance. 1. The paradox of success and layoffs in gaming. The gaming industry is witnessing record revenue growth and notable successes, such as the blockbuster performance of titles like Hogwarts Legacy and Baldur's Gate 3, alongside a staggering rise in layoffs. The report states that 10,500 employees were laid off in 2023, setting a new record. This paradox highlights a critical issue: while the industry appears to thrive, it is simultaneously shedding jobs. Significance. This contradiction is significant because it raises questions about the sustainability of growth in the gaming sector. High-profile titles do not guarantee overall health for the industry, as the financial success of a few can mask underlying systemic issues such as increasing development costs, changing consumer behavior, and economic pressures. The layoffs indicate a potential restructuring phase that could hinder long-term innovation and player engagement. 2. Impact of regulatory changes on mobile gaming. The report details how Apple's IDFA changes and app tracking transparency have impacted mobile gaming's revenue model. Mobile gaming, which constitutes about 40% of U.S. gaming spend, has faced significant challenges due to reduced ad effectiveness and increased user acquisition costs. Significance. This point is crucial as it affects not just revenues but also the viability of smaller mobile developers. These regulatory pressures have intensified competition and may lead to market consolidation where only the largest players can survive. Understanding these dynamics is essential for stakeholders in the mobile gaming space, as it could dictate market strategies and investments in the coming years. 3. Crossover potential between gaming and other media. The report discusses how successful gaming IPs are increasingly transitioning into other entertainment formats such as films and TV series, exemplified by The Last of Us and Super Mario Bros. This crossover potential is a growing trend that can significantly enhance the value of gaming franchises. Significance. This trend suggests a new revenue stream for gaming companies and an opportunity to reach broader audiences. However, it also raises concerns about the dilution of gaming culture and the creative integrity of franchises as they adapt to fit different mediums. Companies must navigate this landscape carefully to maintain their brand identity while capitalizing on cross-media opportunities. 4. Economic pressures and consumer behavior changes. Both gaming and digital marketing sectors are grappling with inflation and evolving consumer preferences post-pandemic. The report notes that while there is growth in certain areas, Inflationary pressures and shifts in spending habits are constraining revenue growth. Significance: this context is vital for understanding the broader economic landscape affecting these industries. Companies need to adapt to changing consumer behaviors, which may involve shifting focus towards value-driven content or innovative marketing strategies to attract and retain customers. Ignoring these economic realities could lead to misaligned business strategies and lost market share. 5. The role of subscriptions in digital marketing evolution. The evolution of digital marketing with a focus on personalized advertising is crucial for the growth of both the music and gaming sectors. Companies are increasingly leveraging data analytics and influencer partnerships to engage consumers effectively. Significance: this shift underscores the importance of data-driven strategies in marketing. For music and gaming companies, adopting sophisticated marketing techniques will be essential for maximizing audience engagement and revenue. It highlights the need for continuous innovation in how companies approach their marketing efforts, particularly in a landscape where consumer attention is highly fragmented. 6. Challenges in mobile gaming. The report points to a stagnation in mobile gaming, with established titles dominating the market and new entrants struggling to gain traction. The ossification of the mobile gaming market poses significant barriers for innovation. Significance: this observation signals a potential risk for the future of mobile gaming. If new developers cannot break through established barriers, the market may become increasingly homogeneous, leading to a lack of diversity in game offerings. This stagnation could limit growth opportunities and diminish the overall gaming experience for consumers. 7. Potential for future growth in emerging markets. The report mentions that the gaming industry's growth will increasingly come from non-Western markets, particularly in regions such as India and Brazil, where mobile gaming is surging. Significance: this highlights an opportunity for gaming companies to expand their market reach significantly. By investing in localized content and understanding cultural nuances, companies can tap into vast and underserved audiences. This shift could redefine market dynamics and create new revenue streams that were previously overlooked. Conclusion: the anticipated 50% revenue growth in the gaming, music, and digital marketing sectors by Q4 2023 is a multifaceted phenomenon characterized by both triumphs and tribulations. Understanding the overlooked nuances within this report is vital for stakeholders aiming to navigate the complexities of these industries. The interplay of economic pressures, regulatory changes, and the evolution of consumer behavior will shape the future landscape. And companies must remain agile to seize emerging opportunities while addressing inherent challenges. 1. Gaming sector paradox. The gaming industry is facing a unique contradiction characterized by significant layoffs and revenue stagnation despite numerous successful game releases. While major titles like Hogwarts Legacy and Baldur's Gate 3 have achieved substantial sales, the overall consumer spending in the U.S. gaming market has only increased minimally by 1.1% to $57.2 billion in 2023. The paradox arises from escalating development costs and a decline in user engagement, leading to a wave of layoffs that reached an unprecedented 10,500 in 2023. This tension between a flourishing creative output and a struggling economic model raises critical questions about the long-term sustainability of the gaming industry and the impact of economic pressures such as inflation and changing consumer behaviors. 2. Transmedia and crossover success. The successful integration of gaming intellectual properties (IPs) into film and television highlights a significant trend in maximizing revenue streams beyond traditional gaming formats. Adaptations like The Last of Us and the Super Mario Bros. Movie have not only garnered cultural acclaim but have also achieved remarkable box office success, demonstrating the potential for video game franchises to thrive in other entertainment mediums. This crossover success indicates that the gaming industry can leverage its rich storytelling and character development to attract broader audiences and generate substantial revenue, thereby redefining its place in the entertainment ecosystem. 3. Digital marketing evolution. The digital marketing landscape is undergoing a transformative shift. With a growing emphasis on personalized advertising driven by data analytics and user engagement. The increasing focus on mobile advertising, particularly in light of privacy regulations like Apple's IDFA changes, is reshaping how brands connect with consumers. Companies are increasingly utilizing platforms such as TikTok and influencer partnerships to reach younger demographics, indicating a need for innovative marketing strategies that align with evolving consumer preferences. This shift presents both challenges and opportunities for businesses in the digital marketing sector, underscoring the importance of adaptability in a rapidly changing landscape. For post-COVID market correction, the anticipated revenue growth across the gaming, music, and digital marketing sectors by Q4 2023 is tempered by the ongoing repercussions of the post-COVID market correction. While the pandemic initially spurred unprecedented growth in gaming and digital entertainment, subsequent years have seen a retraction in user engagement and spending as consumers return to pre-pandemic behaviors. The gaming industry in particular faces challenges related to saturation and competition with other forms of entertainment such as video streaming and social media. Understanding these market dynamics is crucial for stakeholders aiming to navigate the post-pandemic landscape and capitalize on future growth opportunities. In summary, the interplay between successes and challenges in the gaming sector, the crossover potential of gaming IPs into mainstream media, the evolution of digital marketing strategies, and the effects of post-COVID market corrections form a complex landscape that warrants in-depth analysis and discussion as industries strive for anticipated revenue growth by the end of 2023. Here are 3 famous historical cases that illustrate the impact of anticipated revenue growth in various sectors akin to the projections for the gaming, music, and digital marketing sectors by Q4 2023. 1. The dot-com bubble, late 1990s, early 2000s. The dot-com bubble was marked by a rapid rise in equity markets fueled by investments in internet-based companies. The late 1990s saw massive growth in the tech sector, particularly for companies that developed websites or offered online services. Many investors poured money into these companies, anticipating significant revenue growth based on the transformative potential of the internet. For instance, companies like Amazon and eBay emerged during this time, experiencing exponential growth in user engagement and revenue. However, by 2001 the bubble burst, leading to significant losses and a wave of bankruptcies. The case illustrates how anticipated growth can drive investment, but also how market corrections can significantly impact companies and sectors. 2. The music industry and digital downloads, mid-2000s. The advent of digital music distribution, particularly with the launch of Apple's iTunes in 2003, transformed the music industry. Revenues from digital downloads skyrocketed, with many predicting a sustained shift in consumption patterns away from physical media. Artists and record labels embraced this new model, anticipating growth through digital sales and streaming. For example, iTunes sales generated $1.1 billion in revenue in its first year alone. However, this growth was followed by the rise of streaming services like Spotify and Pandora, which changed the revenue landscape once again, leading to ongoing debates over artist compensation and the sustainability of revenue models in the music industry. 3. The rise of streaming services, 2010s, present. The emergence of streaming services such as Netflix and Hulu revolutionized how content is consumed, leading to significant revenue growth in the entertainment industry. Initially, Netflix transitioned from DVD rentals to streaming, anticipating a robust market for on-demand content. This shift was met with success as subscriber numbers surged, leading Netflix to invest heavily in original programming. The impact was profound, with traditional cable subscriptions declining and many cable networks struggling to adapt to the new landscape. The streaming model demonstrated how anticipated growth in a sector can lead to rapid change and innovation, reshaping industry dynamics and consumer behavior. These historical cases reflect the complexities of anticipated revenue growth across different sectors, highlighting both opportunities and challenges similar to those faced by the gaming, music, and digital marketing sectors today. Future outlook: anticipated 50% revenue growth in gaming, music, and digital marketing by Q4 2023. The trajectory of revenue growth across the gaming, music, and digital marketing sectors is poised for significant transformation as we approach Q4 2023. Each sector faces unique challenges and opportunities shaped by technological advancements, cultural shifts, and the evolving economic landscape. Here, we explore predictions for the future of these industries. Gaming sector. 1. Continued expansion and transformation. Despite recent setbacks such as layoffs and revenue stagnation, the gaming industry is expected to rebound significantly. The anticipated launch of new hardware like the Nintendo Switch 2 coupled with major game releases will likely invigorate consumer interest and spending. As platforms evolve, we can expect increased engagement in both traditional and mobile gaming markets, potentially leading to a diverse array of successful titles. 2. Rise of subscription models. Game subscription services such as Xbox Game Pass and PlayStation Plus will continue to grow in popularity. These services offer players access to a wide variety of titles for a fixed monthly fee, promoting greater player retention and engagement. As more publishers adopt this model, we can expect an increase in revenue flow and a shift in how consumers interact with games. 3. Integration of generative AI. The application of AI technologies in game development is likely to streamline production processes and reduce costs, making it easier for studios to create high-quality titles. This innovation may lead to an influx of new IPs and genres, attracting a broader audience. 4. Transmedia opportunities. The ongoing trend of adapting successful game franchises into films and series will enhance brand recognition and draw new players into gaming, further driving revenue. Successful adaptations like The Last of Us and the anticipated Super Mario movie highlight the potential for cross-pollination between media forms. 5. Mobile gaming growth. The mobile gaming sector is expected to recover from recent declines driven by innovations in game design and broader smartphone penetration. As mobile devices become increasingly capable of supporting high-quality gaming experiences, more players will engage with games on these platforms. Music sector. 1. Streaming dominance. The music industry will continue to pivot towards streaming as the primary revenue source. Platforms like Spotify and Apple Music will see further subscriber growth bolstered by exclusive content and artist partnerships. This shift will reinforce the importance of digital marketing strategies to drive audience engagement. 2. Live events resurgence. Post-pandemic live music events and festivals are likely to experience a renaissance, contributing significantly to overall music revenues. As audiences seek in-person experiences, artists will capitalize on this trend through tours and performances, further enhancing revenue growth. 3. Technological integration. The integration of technology in music production and distribution will continue to evolve. Innovations such as virtual and augmented reality concerts may create new revenue streams while enhancing audience engagement. 4. Diverse revenue models. The diversification of revenue streams through merchandise, exclusive content, and brand partnerships will become increasingly important. Artists and labels will need to explore creative ways to monetize their work beyond traditional sales and streaming. Digital marketing sector. 1. Personalization and data privacy. The digital marketing landscape will increasingly focus on personalized advertising strategies aided by advanced data analytics. As privacy regulations become more stringent, marketers will need to adapt their approaches to maintain consumer trust while effectively targeting audiences. 2. Influencer partnerships. The rise of influencer marketing will continue, with brands leveraging social media personalities to reach younger demographics. This trend will be driven by the effectiveness of authentic endorsements in building brand loyalty. 3. Emergence of new platforms. With platforms like TikTok gaining prominence, marketers will need to adapt their strategies to engage with audiences on emerging social media channels. Creative and interactive content will be crucial in capturing attention in a crowded digital space. 4. Investment in content creation. As competition intensifies, brands will increasingly invest in high-quality content creation to differentiate themselves. This shift will drive demand for skilled content creators and further integrate storytelling into marketing strategies. Conclusion. The anticipated 50% revenue growth in the gaming, music, and digital marketing sectors by Q4 2023 is underpinned by a dynamic interplay of innovation, consumer engagement, and evolving market conditions. While challenges such as economic pressures and shifting consumer behaviors remain, the adaptability of these industries will likely foster significant opportunities for growth and transformation. As we move forward, a focus on technological advancements, creative strategies, and audience engagement will be essential in navigating the future landscape of these sectors.